probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Boy, I love that music, Mike. It is fantastic. Mike, have you ever been stuck in your trading? Like, no matter what you do, the results just aren't there.
Oh, sure. Yeah, that's a pretty good way to describe January.
Yeah, exactly. Or to describe today. So, hey, what if the secret isn't about what you're doing, but it's about what you're thinking? So in this episode, we're going to basically show everybody how to ask better questions, how asking better questions can actually unlock your full potential as a trader, because that's really impressive. Anyway, welcome everybody. I'm Dennis Wilborn. I am the founder of AutoPilot Trading. I focus on trading systems and automation. And joining me, Mike Lamothe. Mike, you are an authority on trading psychology from Mara Wealth. What do you have to say to everybody? How's January been so far?
Yeah, hello, and how have you been? Well, as far as January goes, January it was going pretty well. Then we got hit with today. A lot of stocks gapping down, and well, one of the things that I told members and also told on X on social media was that the way to handle it, well, when I start to see all my stocks starting to gap down, or many of them beginning to gap down, well, what I'll do is I'll leave my stops in place.
Right.
That was already the plan. So I always like to figure out where I'm going to get in, where I'm going to get out if I'm at a loss, or where I'm going to take profits along the way. So upon seeing this, I'm still sticking with my plan of, okay, if I get tagged, then I get tagged. If price reverses, then I'll be in it. And it's really, I'm hesitant to say it's as simple as that, but in a way it kind of is. Well, we figure out where we're going to get in, where we're going to get out, what the risk is. And part of that assessment is this part of it where, you know what, sometimes the market's going to gap down. And if we have a good process in place where we're not just, placing stops or managing risk all willy-nilly, then you play out the numbers over a long enough period of time and it'll work out. And I actually have a very interesting story to share about that when we have time.
Don't share it yet. That we're holding that off until just a little bit later, but don't share it yet, because I know you're going to share it. But anyway, so what you're talking about, I think it comes down to, I know you prepare similar to the way I prepare, and we define what I like to call them high probability zones. In other words, because and what are the high probability zone? What does that mean exactly? What that's talking about is basically high probability zones on the chart are places on the chart where traders made the wrong decision. Now that sounds kind of weird, right?
A little bit. I want you to walk us through. What do you mean?
Okay. Well, when you're approaching an all-time, a past high, like a swing high and all that kind of stuff.
Okay.
We know that that is an area where sellers will show up. Why?
Right.
Because they at that one time were buyers, exuberant buyers, buying the high, think it's going to run higher, and they were disappointed. So they're sitting there holding on because they're not trading a plan, right? They don't have stop losses and all that kind of stuff. And they've been saying that prayer, oh, dear Lord, please let me get back to break even and I'll get out. So what happens is, and it's the same way for lows, because there's a lot of people who basically sell down to a certain low, or maybe the low is where they put their stop losses because they don't have a solid plan. And so that's what I'm saying. They made places where traders make the wrong decisions, or they could also be considered emotion zones, where they have emotional attachment to a certain price point, right? And so it sounds crazy, but everybody from Wyckoff to a lot of other, even Charles Dow defined this in their study, that the herd mentality, that's where it takes place. And so that's when I call high probability zones, and places where past traders have made the wrong decision. Interesting, huh?
Yeah, it sure is. That's good.
And so, one of the things, and that's where, today, we're going to be getting into 12 questions that traders either should or shouldn't ask. And so what we're going to do, guys, is as we ask these questions, we will put a link to where you can get, go to a PDF or a document where you can actually download these questions and then modify them for yourself. And I'll be sharing that with you, Mike, so you can send it out with your members. But why are we getting into this topic about asking the right questions? And part of it is learning how to ask the right question can impact your trading growth. Recently, I've been reading again for the multiple time James Clear's book, Atomic Habits, right?
Mm-hmm.
And James brings out in that book that a lot of times people get stuck on outcome, and they focus about just outcome. Basically, I want to make a lot of money trading the stock market, or I want, I have to make $1,000 this week. And they are very focused on outcome. But Clear in his book talks about outcome is something that most of us have no control over. What we have control over is how well we learn the process. And by learning the process and becoming a master of the process, we change our identity. Rather than being a haphazard trader, we become a master trader, and the master trader recognizes that the process dictates the outcome.
Right, exactly. And people get confused with it too, because a lot of people think master trader means that you don't lose, or that losses are very seldom, or losses are negligible.
Yeah.
Well, oftentimes losses are managed, but sometimes that doesn't mean that you could be down 1% in a day, 2% in a day.
Sure.
Right? If you don't anticipate that, then it could come as a big shock to some people.
Yeah. Well, that's kind of like today's price price action in the market. Okay. Things fell hard. I mean, especially in the technical area, the NASDAQ dropped like a turd from a tall cow and went splat. And
Can you warn me before you say stuff like that? I would sip of the coffee. We nearly had it all over the screen.
Don't do that. Don't. Anyway,
we don't need a spit take.
Huh?
We don't need a spit take here.
Okay. But, outcome is basically, a lot of traders look at chasing quick profits. Okay. Right. I want to get a fast profit. And, but then the process is learning how to build a repeatable process system. And then the identity is basically you become a disciplined, confident trader who knows that that learns to trust themselves and trust their process. And then in reality, I would be lying to you if I didn't say outcome didn't matter. But the thing about it is you understand that there's going to be X percentage of losses, there's going to be Y percentage of gains along the way. And if your process is such, or your system is such, it's going to be a system with an edge. And so in this type of situation is the what I was going to say, like this morning, I was overjoyed when I kind of woke up about 2:00 in the morning Hawaii time, and which is about 2.5 hours before the market opens. And I jumped up, looked at my phone real quick, and I go, oh my goodness, it's going to be a bloodbath, right? I was totally cool with that because my system was my stop losses were in place. Everything was taken care of. My orders to buy were already in place based on the high probability zones on the chart that I'd already defined on Saturday and Sunday. And so I'm ready to go, right? So bingo, bango, I get stopped out of some of my system, stopped out of some of my positions for a small loss, which I'm okay with that because I had already taken out some profits on the way up on these positions. Right. And so I'm going, okay, so my system did what it was supposed to do, take me out of the market on extreme weakness and also got me in as I pulled back into some of these high probability zones on a couple of positions I didn't have before, but I had planned for them this weekend. So, but here's the kicker. By the end of this episode, you'll know how one simple shift in the way you think can actually completely transform your trading. So, Mike, you told me a story this past week that I just thought that is a cool story, and it had to do with an email or a DM that you got from one of your members or somebody who follows you on social media. What was that about?
Oh, so well, if we're talking about the first question, or we're talking about
yeah.
So with that one, so you remember when we had Jason Shapiro on?
Yes.
Yeah. So posted that video, fantastic. Got a lot of great comments and feedback on it from 99% of people.
Right.
But you always know that there's going to be that 1% that's out there that has something to say, something negative to say. So this guy writes it and he says, "Oh, this was terrible. How can you guys possibly have a market wizard on the show and not ask him to tell you what stocks he wants to buy?"
I'm shocked. Yeah.
Yeah. And I thought that was, especially considering the interview itself. I thought it was hilarious because of what Jason had to say about market gurus.
Yeah, right.
Like, did you listen to what he had to say? But I thought that would be a very interesting jumping off point for the right kinds of questions to ask. Because is asking, well, what stocks are you interested in buying, the right kind of question to ask?
Yeah. Okay. Yeah, I get that. So, but in a situation like that, so do you think that's a big mistake that a trader is making, or is it evident of where they are in their trading journey or their growth journey as a trader when they ask that kind of question?
I think that, well, when most people ask that kind of question, it often comes from a place of, hey, here's an authority. Let me just find out what they're buying, because if they're buying it, it must be good. They've researched it, and I'll just ride along with them.
Okay.
And I don't need to go and do the work. I don't even know what the work is.
Right.
And so I know that I don't know these things, so let me just ride somebody else's coattails, and that'll be good.
Okay, and I think that I hope you would agree with me that isn't necessarily bad, because sometimes people say, I don't want to learn the system. I just want to trade what somebody else is trading, somebody who's an expert. And I get that too. And that's cool. If that's where you're at, that's wonderful. But I come from a perspective that yes, I it's okay for somebody to give me a fish to come home and, fry it up and eat it and all that kind of stuff. But I want to know how to fish for myself. I want to know where the big fish hang out, because I'm going to share a secret with everybody about this aspect of tell me what stocks you're trading. I'm going to share a secret with everybody before we finish this segment. But it's one of those we talked about it a little bit earlier, is a lot of new traders and even traders have been around a while. They ask what questions. Now, not all what questions are bad questions. I'm not saying that, but they ask what questions when they should be asking how questions.
Mhm.
And so we had talked a little bit about for some who basically don't want to go through the learning how, uh,
Mhm.
just because of if it's a lack of time and things you can't control, I get it. That's okay. But if it's basically just a laziness, I'll call it what it is. If it's just basically laziness, I'm going to trade what Mike's trading because
Mhm.
I know. Well, if you had that attitude, you're basically, I think, not trying to take responsibility for your own actions. And so that way, if the trade goes, belly up, you can go, well, Mike made me trade this, right?
Yeah. I think that that's a big part of what people do. I also think that uh, I think that well, we need to ask ourselves, why we want to know in the first place. And I think that it needs to be an honest conversation. Like if we're asking, well, why do I want to know what Dennis is trading? Why do I want to know what Mike is trading? Why do I want to know what Jason's trading or whoever?
Yeah.
Why do I want to know that question?
Mm.
Why do I want to know the answer to that?
Yeah. Well, I think you need to expand on that a little bit because what do you mean by why do I want to know?
Well, I might want to know what you're trading so that way I could try to understand your process a little bit better.
Okay.
So if I'm following along well with you and I'm trying to learn your process, and if I'm trying to follow your process, then I should come up with the same or at least similar results.
Okay.
And so
Sure.
knowing what you're trading will help me figure out, well, am I close or am I not? This is actually part of what I did way back when I was first learning Can Slim and IBD. I would go and do the work myself. Then I'd crack open the paper to see, well, what are they saying about the market? And I'd
Okay.
be like, okay, I'm pretty close. And as I got closer, that's when I was like, all right, training wheels are coming off, and now I'm going on my way. That's a very different perspective than, well, just tell me what to buy. Can you just tell me what to buy? And I'll just
Yeah.
put my
Yeah.
money in and I won't need to worry about it, because I've had that perspective too. And that got me into a lot of trouble because, well, what
Yeah.
happens when that person's not there? What happens when that person isn't able to tell me how to manage the trade?
Yeah.
Because just knowing what to buy is the tip of the iceberg.
Yeah.
The rest of it is, well, how do you manage the trade? What kind of sizing do you use? Do you put in a large portion of your account? Do you put in a small portion of your account? Why do you do that? How much of your capital is actually at risk in this thing?
Right on. Yeah. So yeah, and so that's why I can tell you what I'm going to buy this week, but if you don't know the mechanisms, the mechanics of the buy, about okay, how much my as you said, how much my portfolio, like this, the pre-flight checklist that I send out to all my members this past week, I explained to them I am only going to buy a half of a full position because the market looks wonky. Well,
Right.
and 2020 hindsight, dadgummit, I was right. But to take that kind of approach on some of the cases, I said I'm only going to buy a quarter position, uh, and then I also make sure that so they know what I'm going to buy. The premium members know what I'm going to buy, but they know how much am I going to buy, how much I'm going to buy, and they also know exactly where I'm going to exit. Because knowing what I'm going to buy does you absolutely no good unless you know the rest of the story. Where am I going to exit for a profit? Where am I going to protect my capital?
Mhm.
Wow, that
Absolutely.
was really good, Mike. So so how can we, okay, so one of the things we said that is that asking the question, what stocks are you trading, as you said, creates a dependency, and it doesn't require any skill other than just to be able to put your order in. And so how could you how could a trader reframe that question to in this situation? So how could they reframe that?
Yeah, good reframe might be, what criteria should I use to find the best opportunities?
Hmm. No, what makes that a better question?
Because if they understand what criteria they should use to find the best opportunities, then they're able to build a replicatable process.
Ah, okay.
And if they are able to build a replicatable process, not only will they have a much better understanding of what they're doing themselves, then they become self reliant,
Sure.
or they're at least on the path to becoming self reliant.
Yeah. Yeah.
And later on, if they want to pass off their process, maybe they have a life change where they need to get additional help from somebody else, then they're able to pass it on and still have an understanding of the mechanics and what's right, what's wrong, how should they behave. That
Yeah.
actually happened to me. When Lily was born, uh, I my process was turned on its head for a little while because being a new dad,
Uh-huh.
and I came to recognize that about 6 months in. So, so back then, a little bit more dense than I am now. But when I finally was able to figure out, hey, I need to get some help, I was able to reach out to my friend Adam Sarhan, who had a somewhat of a similar process than I do. We're both trading fairly similarly, same kind of stocks. He's trading a little bit more longer term than I am, but he was running something of a model portfolio and would give out his trades and everything. And so because he and I were trading so similarly, and I had a good understanding of his process, and I had already built the skill to understand all that, I was able to say, okay, let me outsource the research and that part to you. I'll take it, and then I'll trade that way. And I ended up doing fairly well. If I recall correctly, I was up maybe about 60-70% that year.
Yeah. Yeah. And so, yeah, my story is kind of the similar in that I'm a technical analyst. I do not
Okay.
like doing fundamental analysis, right?
Mhm.
However, I found a place to outsource this, and this is a plug for IBD, Investor Business Daily. They, I think, have the best criteria, one of the best criteria that I use. And so, if a stock doesn't rank high on their ranking system, it doesn't get on my final list. I just go, eh.
Mhm.
Now, the leverage ETFs that I trade, that's a different story. But I still maintain a short list of only 7 ETFs that I look to trade. And so one of the things I just want to remind everybody about is that in Mike's book, the
Oh.
tra- the trading mindset, Mike covers basically the 8 essential skills to trading mastery. And I suggest and recommend, highly recommend you get this. It will basically help with your mindset and a lot of the mechanics. In my book, Trade Your Way to Freedom, I cover my 3 top triggers and entry procedures for the mechanics, the how to that have been very successful for me, helping me to beat the S&P for the last 13 years with an average return of about 35%. So, and so again, it's the how to oftentimes more than the what. And so,
Mhm.
so what's the next, Mike, you know, so let's shift over into, chasing tips and building confidence out of our own analysis. So how much money okay, here's the next question traders ask. Now, this is a how question, but how much money can I make from trading? Why is that
Yeah.
a
Yeah, it sounds like a
question?
reasonable enough question, right?
Sounds
But
like,
but the yeah, the problem with it is that it tends to overemphasize profits instead of process.
okay,
So if we're focused on, well, how much money can I make? how much money can you make depends on so many different factors. Part of it has to do with, well, how much capital do you have?
Yeah.
Well, right? If somebody with a $1 million account is going to make a lot more than somebody with $1,000 account.
Yeah.
At least has the potential to. Well, what's your skill level?
Yeah.
How much risk are you willing to take?
Right.
What kind of a system do you have? Well, what's the average return of that system?
Sure. And so, yeah, well, exactly that part you hit on right there. What's a reasonable return on a system? I think Dr. Stocks, Dr. Carr, in his book, he talks about swing trading. Right? I'm a swing trader, and he says a good swing trading system will generate somewhere between 30 to 40% per year.
Mm-hmm.
So that gave me a good benchmark when I developed my system. How am I measure up against that number? And so knowing that, that gives me a benchmark every year to say, hey, how, and I don't take it like, oh, I didn't make 30% today. No, it's the body of work across the whole year. So Alberto's leaving some really good questions here. How long is a piece of, how long's a piece of string, or how do you make a small fortune on Wall Street? Start with a large one. Yeah, that's excellent. And so, but there's examples out there like Nicholas Darvis and how he did his mechanics.
Mm-hmm.
When he was focused on the money, he did crappy. But when he focused on his system and just stuck with his system, he made $2 million in 1 year. And this was back, what, 1920s or something like that? A lot. When he was doing his trading by telegraph, for my goodness sakes. So what are some of the, how would you reframe the question on, how much money can I make trading? Because it's unlimited. You can make $1 bazillion, right? But what's the probability you're going to make $1 bazillion, especially if you're only starting with $1,000 to start investing, and you want to make that much in 1 year? So, what are some of how can we help people reframe that question?
Yeah, well, what's your goal, and do you have the risk to reward ratio that aligns with that goal, and also the probabilities?
Okay,
because that'll play a factor as well. I actually think that this is a good time to tell you that story that I mentioned earlier.
Okay, yeah,
because it fits right into this. So last weekend, I was at Mark Minervini's 60th birthday party. Huge party. He had 1,000 so people there. I met up with one of our members, Patrick Miller.
Okay,
great guy. He was telling me that he had the opportunity to speak to one of the U.S. investing champions. I forget which one he was speaking to, but he was giving this talk, and he was saying that at one point last year, he had 27 losses in a row.
Oh, wow.
27 losses in a row. Well, now the question that I have for everybody watching or listening to this now or later on a recording, would you stick with a system or a process if you had lost 27 times in a row? Most people wouldn't. But at the end of the year, this guy was the top competitor in the championship, triple-digit return, 200+% on the year.
Yeah.
27 losses in a row. So how do you do that? Part of it is from reward to risk.
Okay.
Part of it comes from your position sizing.
Yeah.
So if you had asked, this even ties into that first question, what stocks are you trading? Well, if you had got that guy at the wrong time, well, would that have been helpful to you? Probably not.
Exactly. Yeah.
So understanding process is so important. And a big part of the process is understanding reward to risk. So what reward to risk ratios align with your goals? that's a very good question to ask.
Yeah. So, and this leads me to a secondary question on this one, like for how you do this, Mike, because I know how I do it, but at the beginning of every year or closing off of the year, where you look at, okay, what are my objectives for 2025?
Right.
Do you set a dollar figure? Do you set a percentage gain? I'm talking about your whole body of work for the year. What you're, so it's just so you can at least have some expectations and something to measure against. Which do you do? Dollar figure or percentage, or and then take that number and then break it down into goals and objectives for your process.
Yeah, so it's always percentage based.
Okay.
Percentages grow with you. Dollars don't.
Mm.
I've gotten anchored into dollar amounts
Yeah.
in the past, and it's not helpful. So when I started to think in percentages, it allows for growth, because if you're managing $10,000, if you're managing $100,000, if you're managing $1 million, percentages scale. So
Right.
if you're down 1% or you're up 10%, it's a lot easier to think in terms of percentages early versus, oh, well, I'm up $100. That sounds great. Oh my God, it's $1,000 loss. And then
Yeah.
if you're thinking in terms of percentages, it's a lot easier. And yeah, go ahead.
No, well, what I was going to say, I agree with that wholeheartedly, and I do the same thing as far as I look towards percentages, and because the fact of the matter is I heard it said a long time ago, you earn your size, and if you focus only on dollars, you will never. Well, and this is a broad statement, but I'm going to say it. I don't think you will ever reach your full potential as a trader, because a $500 loss when you have a $5,000 account is a lot, and
Right.
you would totally freak out if it was a $5,000 loss, because it will wipe you out. However, if you're trading with a 200, 300, 400,000 $1,000 account, a $5,000 loss, like this morning, with the market resetting the way it has. Okay, yeah, some of these were down several $1,000s, but if I hadn't been growing my understanding and earning my size, I can imagine, many years ago, a $10,000 drawdown would have freaked me out. But it is like less than even 1% of my portfolio right now. So again, percentages, and but it gets back to, I know what my system's going to do. On average, my average drawdown is going to be about 3.5%. So, or does it, that's the mid average. Are there outliers? Yeah, sure there are. Because you can't foretell all gap downs and that kind of stuff. And then, my average gain is about 15 to 20%. That's my average gain. So I'm, working it really nicely with almost, a little bit over a 2-to-1 risk reward, which then allows me to carry about a 40 to 45% win-loss ratio and be profitable. So, no, that's good. So how do you let's see? Follow-on questions. How do I track and adjust my strategy to improve over time? Again, that's another great question that somebody could ask themselves. So, coming up next, we're going to talk about reframing other questions that can actually make you more consistent. And talk about reframing questions. Let's talk about that just briefly. Do you suggest to people that they write down the questions they have about trading and then start digging down, okay, and ask themselves, what's another way to ask this question? Or I asked this question, let's say it was, how much money can I make trading? What's the underlying question below that? And, what issue is in my own personality or my own identity is the original question trying to answer?
I think the more writing we do, the more helpful it can be.
Okay.
I think that when we write things down, it adds quite a bit of clarity because it forces us to construct sentences and paragraphs, right? Just a very simple act of writing it down. If I'm ever unclear,
Yeah.
as I start to write, I'll either get clear or I'll hit a roadblock, and that roadblock that I'm hitting showcases, highlights, points a spotlight on that lack of clarity, and then it
Right.
forces me to think through it, and then I'm able to get clearer as a result.
Yeah. Yeah. So no, I agree with you. So writing it down, and can I take that
Sure, please.
another level? Is I think writing it down, and I think also the concept of calling it out loud, where you can hear it.
Mhm.
You can walk yourself through a trade. You can walk yourself through your goals, your objectives for the year, and that kind of stuff, and call it out. Um, and there's psychological studies that show that when people will call out their process of,
Mhm.
yeah, hey, I am up 5%. I will adjust my stop losses appropriately to break
Mhm.
even. And they call that out. But when people call out their checkpoints, it actually is shown that there's a improvement in performance of somewhere between 30 to 70%.
Really, that's
Uh,
interesting.
and again, that comes back to James Clear's book on automatic habits, atomic habits. Excuse me. And then Alberta asked
Mhm.
another good question. So, yeah, a wise man once told him that he measured his performance against the main indices like the S&P, and so many other professionals do also. So that if the S&P is down 20% and you've done better than that, then you know you've outperformed, and so you can be okay with that. And so I'll answer, Alberta. I'll answer my part of that is I do compare my yearly performance to the S&P. I want to beat the S&P, but I want to have a record of not having any losses in my portfolio. Now, I'll have losses in my portfolio, but the cumulative loss gain for the year, I want a cumulative gain every year, and my process has been able to do that for me for the last 13 years, and we beat the S&P 12 of those 13 years. What about you, Mike? Do you compare to? Is that one of your marks of success that you beat the S&P?
I'll glance at it, but I'm not really overly concerned with that. So long as my account is steadily growing, I'm growing each year. I will. I'll look at the S&P 500. Sure, I'll look at the Nasdaq and see, well, how did I do in relation? But it if I'm doing better than I did in prior years, then I'm doing then I feel as though that's a win. And that might not even be reflective in a percentage gain or loss because the percentage gain or loss is also a factor of the general market condition as well.
Oh
So
yeah,
I'm looking at how well did I manage my trades.
yeah,
Uh, I'll look at things like a high watermark of a trade that I'm in.
sure,
So if I see that a trade, let's say that I'm in a trade and that trade runs 100%,
okay,
and let's say I'm able to capture just 20% of that. Well, did I do well or did I not do well?
sure.
Right? I'm up 20%, but the trade ran 100%. So there's room for improvement there. So I'll start to look at metrics like that versus, how did I do against the S&P or against the Nasdaq?
Okay. So you do look at that then. Not necessarily on a yearly basis, but I kind of track every year because I want to know how I done against it. And the reason I do is because a lot of people uh, they've learned that the fund managers do track against that also. And so they want to know what, well, how do you compare to the fund managers and all that kind of stuff. And so at least knowing that number is a good thing. So the next question, Mike, is going to be, this one's going to knock your socks off. Okay. Here's the question that is asked. What's the easiest way to make consistent profits? So why is that? What's up with that question?
What's the easiest way to make consistent profits? There's unrealistic expectations.
Yeah.
Could be frustrating. Trying to figure out, well, what's the easiest way? Why does it need to be easy?
Okay, yeah. Well, that's part of the deal with that question, don't you think? Is that doesn't when I say, hey, what's the easiest way? Doesn't that reveal something about my thought process and mindset towards trading?
If you're looking for comfort, the market's not the place to do that.
Okay. So if you're looking for, that's a really, we should like get a tattoo that says that.
Work that into the new intro when we do that again. Maybe the outro. If we need an outro.
If you're looking for comfort, the market's not the place to be. Okay. And so
it really isn't. So
yeah.
If you're asking what's the easiest way to make consistent profits, don't trade.
Yeah. Yeah. Well, I think, I would say I like the aspect of reframing the question. What process can I build to improve my consistency over time? Which I think it brings back the fact that, hey, I'm going to have to take responsibility for my own actions to adopt or build my own a system that has consistent profits. Also, what does consistent profits mean? Exactly. What's your definition of consistent profits, Mike?
Yeah, I see that, and this is where writing this kind of stuff out can really be helpful to people because, well, what's consistent in their mind, right? Even in that question, what's the easiest way to make consistent profits? Well, what do you mean by consistent? Does that mean that you're making a profit on every trade? Does that mean that you're profitable at the end of every week, at the end of every month? Well, what does that mean? What's consistent about it? Does it mean that you're up a certain percent all the time? Does that mean that your equity curve is continuously growing? When I think of consistency or consistent profits, I would be thinking of a steadily growing equity curve with minimal drawdowns.
Okay.
And so that's why the system that I have is set up to do that.
Okay. Yeah. So, but your equity curve, it doesn't go up in one straight line.
No,
right?
No, definitely not. Right. So the equity curve, if I'm going this way, it looks like I'm heading towards you, and it's going the wrong way.
Yeah.
So,
Go the other way. There you go.
So it's more like this, and then level off, and then perhaps a little bit dip, and then it'll start to keep on rising. So long as you're able to draw that line, and it's able to go up over time, that's what you want it to do.
Yeah. Exactly. And because I kind of call
that
also
presumes that you're not going to know for months, for years, right? A lot of people want to be consistent right out of the gate. Well, if you're new to trading, you're not going to even know if what you're doing is leading towards consistency based off of the equity curve because you don't have enough data yet. So what do you do in that scenario? Well, that's where learning a process and starting with something that already actually works. None of us here need to reinvent the wheel. You've got a system that's been profitable, beating the market every year for more than a decade.
Sure.
And
So,
there's other systems out there too, so nobody needs to reinvent the wheel with any of this stuff.
oh,
So
exactly.
at least start with something that works.
Exactly. Because that's one of the things I enjoy working with my fellow engineers, because and I tease them a little bit because engineers have this. Okay, they've been educated to do this. Is they've basically been educated to try to make things better or make things.
Mm,
And so, unfortunately, along the baggage that comes along with that mindset is, well, I see a process and I'm geared and wired to try to make it better. And typically for engineers, a lot of times that means making it more complex, and they don't realize, like Leonardo da Vinci said, they don't realize the sophistication of simplicity.
mhm.
And that's a really good term. We should use that. No, the sophistication of simplicity. And that's one of the things that I, try to break the mold on that is break it down into, hey, let's clarify and simplify so you can multiply your account. And that's one of the things that I've done. I posted in the comments for anybody who's interested. I do that by trading simple things like TQQQ. And I just put together a video that talked specifically about my 168% return in 2024, doing doing exactly what you had said earlier, Mike, is knowing how to compound through the year, and
Mhm.
that's a compounded amount. Where
Right.
I wasn't in the market for more than 14 days on average on any of the trades, but over the year, the body of work, it compounded out. So you talk about the P&L statement for the year, or for the year, but also you have one for the 5 years, the 10 years, and all that kind of stuff as you grow your account. Uh, I look at my yearly uh, P&L, the line I've drawn there from 0 to 40% on my chart, is I look at that as being my when I finish the month off and I know what I did for the month. That gives me an immediate batting average that says, am I on schedule, ahead of schedule, or behind schedule? So it's almost like a timing indicator also. So
Mhm.
if I'm below the line, well, I'm behind schedule for where I want to be at the end of the year. Now, I don't do anything, and then if I stay behind schedule for like 2 months in a row, then I step back and say, okay, what is not what pieces of the mechanics are not going, piecing together properly. And so anyway, do you do something like that where where you're at, because you have a projection of where you want to be, percentage wise and all that kind of stuff, but how do you know if you're how do you tell if you're ahead of schedule or behind schedule?
Yeah, to be honest, it's not really something that I'm really looking at that closely as far as like metrics and things go. I know what a good month looks like. I know what a not so good month looks like. I know what my if I'm managing risk well or if I'm not managing risk well.
Okay.
Um, the more that I've gotten into the comparison game of it, like, am I doing well versus this benchmark? Am I doing well versus this person or other people? That's been the thing that's gotten me into the most trouble because though when I start to compare myself to all of that, that's when I start to feel like, oh, I'm ahead, I'm behind, and I need to start making these kinds of adjustments. Whereas last year, I was treading water for most of the year, and it was really 3 months that were sensational and produced the vast bulk of the returns. So if I started to worry about what another benchmark or what another person is doing for those other periods, that then it might get me off process
Okay.
and not looking at what I should be doing. Well, what we want to be doing is looking at what our process is. If your process is, and for you, if your process works very well for you, and you
Sure.
have the the track record to show it. So part of your process is looking at this comparative measure of the U versus the S&P, and you've got that. So that's good. That works for you. Well, does that mean that I should try to put that in? Well, in my case, no, because I have done similar in the past and it's knocked me off.
Yeah.
So it's better for me to stay on process and know that at the end I end up with a fair result.
Yeah, and I want to clarify. I don't do that comparison on a regular monthly, weekly, or any type of basis whatsoever. Basically, that's one of the things that the checkpoints I have at the end of the year to say, okay, how did I perform, with respect to, and that's all I do.
Well, yeah, I was good. No, I was just gonna say, I'm sorry. Well, one of the things that that I find interesting is how am I doing relative to this particular point in time a year ago? So how's this January versus last January versus the January before that? Then I could start to see seasonality within my own performance.
Excellent. Yeah. Yeah.
And so that helps to set expectations and manage risk. And it's still something that, like, I'll still trade the market in real time. I'll still trade the market that's presented in front of me. But it also gives me that little bit more of an edge to be like, yeah, you know what, things are going pretty good, but this is this the right time? Well, historically, maybe not, but I still want to manage the trades that's there.
That is so spot on. Yeah, I mean, because I do the same thing, looking at the past performance on a chart of year after year after year, and then you can, a person, when they do that, you can see where are your weak months. Do they correspond to the weak months in the market? And that kind of stuff. You can ask a lot of questions, but also take some actions. So, like, I know that typically January oftentimes has been, one of my most challenging months. January is just a challenging month historically. And so it's not that I don't take the trades if I have a setup, because I have to teach myself, if you have a setup, you're breaking your rules if you don't take the trade. Right. And so the second thing is though, I can say, okay, but I don't have to go, balls to the wall and go all in, especially when I know that there's a historical thing that of having challenges in January. So I can go, hey, smaller size, and it's okay. And so let's get into a couple of the process questions, because a lot of people ask, okay, what platform are broke? Well, yeah, they ask the question, and I don't want to get stuck here for a long time, but what platform or broker is the best for trading? And I know you trade Thinkorswim, but I think you do TradeView also.
Yeah. So I have Thinkorswim. I also have an account with Interactive Brokers, and there's a couple of other platforms out. Like for shits and giggles, I have Robinhood. I've got an account with them, and for crypto, I'm using Coinbase. So like I've got different accounts at different places, but I'm only using the broker for order execution. That's it.
Okay.
So, like right now, you and I are talking. My brokers are all closed. I'm not looking at them at all. Okay. I want to do all of my charting and analysis outside of the broker.
Right on.
And part of that is baked in because in the past, I've noticed a habit that when I would see a trade and I'm doing my analysis inside the broker, oh, well, they've got their charts. It looks real good. Oh, you know what? This looks really good. Let's just place a trade. And it's real easy to do. They've set it up where you can even click the chart and place the order right there. So who's that serving? Is that serving me or them?
Yeah. Well, clearly if that has led you down the wrong path in the past, it's not serving you.
Right.
Yeah.
Exactly. So that's why I've purposefully built in buffers
Yeah.
for myself. So that way, if I'm looking at a chart and I see something developing, I've got that extra little bit of time to say, oh, do I want to be placing this? And then it'll take time to load up, and in that, I'm able to catch myself and the thought patterns.
Mike, I think that this is what you just said is one of the richest things. Probably, well, we've talked about a lot of great stuff today, and so I want to compliment us on that. But I think that is a rather golden nugget that you've just laid out there for people to basically grasp and take away, is that you know yourself well enough that you know what your cues are. Now you can have a
Right.
cue that will spawn a habit, a habitual reaction that's either
Right.
good or bad, right? So you know that if you're doing your analysis during the market on a chart pattern, because I use the Thinkorswim, charts, and I love them, all kind of stuff. And I've had to condition myself not to take action except during the final hour of the day, right? Or after hours. So that's my rule. But you've taken a step forward, recognizing that the cue that would result in a poor decision is trying to analyze during live market on the chart that is connected to your trading account. And because
Right.
you're right, it's a slippery slope of, oh, that looks like a really great, great opportunity. And so now that is a huge nugget and that's one of the reasons why I really suggest to folks, designate a time in the day you're going to trade, and then don't screw around with that. Don't, stick with your guns. And for me personally, I think the first hour of the day is the worst time of the day to trade, because oftentimes your candlestick for the daily chart might look really, really great, but 6 hours later into the final hour, what turned out to be a bearish engulfing may be, a tombstone doji, which is not a particular candlestick you want to be trading. Or
Mm.
you may have dropped down below the 8-day moving average that you wanted to trigger in on. So if you wait for that last hour of the day, the probability of having a better trade, I think, goes up dramatically. That's good.
Interesting.
And
So,
so,
can I ask you about the mechanics of it? Like you just mentioned something in there that now I'm curious about personally. So,
okay, go ahead.
uh, so if a price crosses a trigger in the middle of the day, will you take that trade, or are you waiting? Do you have it set up to wait until the end of the day to trigger? Is there like some kind of a mechanism there? Is that what you're saying, or?
Well, yeah, I use an automated. I use what we call first triggers an OCO, a 3 OCO, and the trigger is set up after hours or over the weekend,
Right.
and it's defined at one of these high probability zones that we talked about earlier.
Right. Okay.
And so I will have a conditional order sitting there, and that
Right.
conditional order will sit there until Friday. And at
Okay.
4 o'clock in the afternoon on Friday, if it's not filled, it cancels automatically. And so that way I can go about my business, because I look at the market the first hour of the day just to get my bearings, but I typically don't make any adjustments at that time. But my orders are based on those, high probability zones, which are typically either pullbacks or slight breakouts above the 8-day moving average or 8-week moving average. And that's where, or a lot of times I'll put in 2 orders. I'll buy half the position on the pullback and half the position on the pullback. Let's see, where am I? Yeah. And half the position as it breaks out. And that's been very successful for us. So did I answer your question?
Yeah, I think so.
Okay. And so, yeah, so that basically, so um, everything is pre-planned. Is everything pre-planned? And like this morning, we had a trade in for a Shopify, right? To buy Shopify, and
Mhm.
I had defined a trading zone where this is where I want to enter this. Well, with the price action gap down below the zone,
Mhm.
so I'm not interested on buying on weakness. I want to buy on strength. And throughout the day, price action started pushing its way back up into the my target zone,
Okay.
and then I was filled, and now it's proceeding. Hopefully, it's proceeding to move up. Let's see if it is. And so, yeah, it is continuing to move up because, like I said, we had the zone in place, and so that it would automatically trigger if prices moved up in there. One of the things I'm interested in is having somebody coach me up on, can you set the kind of orders we do? Can you set it up on interactive brokers? And I don't know if you can or not, but because we have all ours automated, where guys actually just copy some orders down from our pre-flight checklist. They slap that over on the Thinkorswim platform, and it uploads, and then, pow, your order is in place. Yeah, both your buy order and your exit orders are all in place. So let's see what else we got here. So I'm gonna and let's wrap this up basically, and I know you're not supposed to say that, but if you like these questions, please either shoot Mike a DM or me a DM or make a comment over on the YouTube or the Spotify channel, and we'll send you a copy of all of these questions and also some of uh, the what do we call them? Where am I at? The reframing of these questions. Try to focus on doing questions that are related to the process, but also there are some questions that are related to mindset. And so, how do I deal with fear and greed in trading? Mike, that is a question a lot of some people may not even be aware that they are asking that question, or it takes a while. When did you become aware that your trading was kind of dictated by fear and greed?
When I started to get into Mark Douglas's work,
Okay.
and when I started to learn about Van Tharp and
Yeah.
psychology, that's when I was able to see what some of these things were, and then do some of the exercises that helped me take a long, hard look in the mirror and say, "Oh, I actually fill out most of these things here that are pointing to fear and greed."
Yeah,
So,
I've taken that same test, I know. Go ahead.
yeah, so yeah, and to what we said earlier, well, why is writing so important?
Mm. And so, fear stops a lot of traders from executing, and it just causes them to freeze up, and greed can lead to over trading or being one of those persons who I talked about earlier who made the wrong decision, and they
Right.
define where our emotional zones or our high probability zones are. So, uh, in that, Mike, what's a follow-on question a
Well,
person should be asking
well,
regarding that?
well, you know why? From my experience about fear and greed, and why do people get fearful? Why do people get greedy? From my experience, it really has to do with two things: either not knowing what to do, or you're too tied to the money, too tied to
Mm,
the outcome.
yeah, yeah.
So, well, if you're sitting in those kinds of spots, you don't know what to do, then you need to figure out, well, what's the plan? What does the plan need to be? So that might be a better question to start asking yourself. Well,
Okay,
what kind of a plan should I have?
okay.
And people will start to wonder, well, how do I figure that out? Well, the great thing about trading markets is that you don't need to reinvent the wheel.
Yeah.
Right? I didn't reinvent the wheel. You didn't reinvent the wheel. And although at one point when I first found out about stocks, I did try to reinvent the wheel. It didn't go so well. And then I finally found O'Neill and Minervini and
Yeah.
a number of other people. And then I copied their wheel. And it doesn't mean that you just take somebody's thing. Like you take it and then you make it your own, and you can still add your own little twist of things, and
Yeah.
that's okay too.
Yeah.
But have a plan. And then if you're too tied to the money, you're too tied to the outcome, well that would be like you're driving to your friend's house and you're looking at the GPS instead of looking at the road.
Yeah. Yeah. Exactly.
You need
Yeah.
to be focused on the process.
Exactly.
You need to be focused on the process, not on the money. And that's one of the things that I noticed about myself when we were mentioning earlier about, well, am I actively tracking where the S&P is versus where I'm at? No. Right? Like
Yeah.
I'm still looking at the S&P 500 every single day, along with the other indexes, but it's not to see, well, how am I doing versus them?
I
It's
agree.
giving me other data for how heavy or light I should be exposed.
Yep.
So by focusing on process versus profits, I think that's a much better question to ask ourselves.
I agree. And then also in the excuse the pun, but in the process of doing that, we start to become the trader that we become the trader we can trust.
Mm.
You know what I'm saying? Because I trust myself to follow the process. And so one of the questions a person could ask in this particular case was, what routines or tools can I use to keep my emotions in check? And one of the ways I've done that is just basically rely on a mechanical system, the mechanics of the system. Let those, and also I know what my system should do. Okay, based on both back testing and years of use. And as long as I'm operating within the parameters of my system, okay, I don't have to worry about either fear nor greed, because they don't enter in to my decision making process. Now, I know that fear and greed are represented on a chart at various points, and we talked about them earlier. They're those high probability zones where either fear or greed has resulted in a swing high or a swing low. So anyway, so that's great. And so
Yeah.
so just to
One more
summarize
thing on
things,
trust.
what's that?
Can I add one more thing about trust?
Yeah, sure.
And I think that trust and goals come into play too. So let's just say I'll take somebody that says that they have a goal, and they say that this year is going to be my year. This year, I'm going to make 100% return on the market. I'm going to hit triple digits for the first time, and it's going to be great. So they work real hard. They're following the process, but let's just say that it's a bad year in the market. Let's say that it's choppy and it's not conducive to a triple digit return year for them or for most systems.
Right.
Because they've anchored themselves to a certain result and they don't get that result, are they trustworthy? You said that you're going to do something, you didn't do it.
Okay.
I think that building trust is following through on what we say that we're going to do.
Exactly. Which gets back
So
to
we
the
need to be
process.
careful of what we're going to say we're going to do.
Yeah. Yeah.
So maybe we should say, instead of saying that I'm going to hit a certain outcome, well, what if the outcome is I'm going to follow my trading plan?
Yeah. I agree with that wholeheartedly, Mike. I mean, and you know, sports psychology and a lot of trader psychology speaks to that specifically. It talks about that aspect of, yeah, you have that ultimate yearly goal. Let's say, you know, like in my case, it's 40%. I don't have any control over getting to that result because I will basically be affected by the ebbs and flows of the market.
Mm-hmm.
So while that is my goal, my objective for the year, my mini or micro goal, the things that I have control over, like you said, is working my process, making sure I'm trading the right kind of stocks, making sure that I'm hitting one of the 3 entry points I cover in my book. And
Mm-hmm.
and those are the things that I can measure. And I hate to use the term success or failure, but how to measure success or failure? How well did I follow my rules? Did I use
Right.
stop losses on every, you know, there's a whole list. There's a checklist, you know, and I think a person's checklist should probably be maybe 10 items. But it varies. I mean, like I have my checklist for my routine for the yearly, my routine for the quarterly, my routine for the monthly, my routine for the weekly, and then my routine for the, you know, the weekly generates my daily routine. And it's how successfully did I do my routine? Did I follow my routine? Did I violate my rules? And if I'm violating my rules, I know I'll see that turn up in the results. So I think, as you were saying, let's work towards adopting adopting the recognition that results, you know, our process will lead to results, but
Mm-hmm.
process also is I think the hinge pin that will also lead to becoming a better, trustworthy, as you said, trustworthy trader.
Right.
Cool. That's really good. So, hey guys, outcome-based questions limit growth because you're just focusing on what might happen and things you actually have no control over. Process-based questions will build systems and consistency in both thought and habits. And then mindset-based question transforms how traders see themselves and handle uncertainty. So remember, the questions you ask will determine where you are, not at the end of this week, but where you are at the end of a month, at the end of 6 months, at the end of the year, and hopefully as you grow your wealth at the, you know, 10 or 20 years from now. So, hey guys, if you thought that this episode has helped you think differently, one, share it with another trader. You can share Spotify, you can share off of our YouTube channels, but help us spread the word about trading truths because we truly are here to help you debunk the market myths that are out there. So, Mike, I'm going to say aloha, God bless, and any final thoughts for everybody?
Yeah, no, well, we'll see you next time. It's been wonderful talking to you again. Always get
Yeah,
something out of this.
yeah. I missed missed last week, and so
Yeah, I know. It's been a long time.
it seems like, and so as I was sharing with everybody, last week seemed like a long, short week, or a short, long week, or something, because there was only, you know, the Monday was a day off, but just just so much happening last week. So, okay, aloha, everybody. God bless, and we will see you next week. Bring somebody with you next time. See ya.
All right.